we're getting comfortable with the trajectory of inflation. We're more concerned about jobs, which means that it opens a door for a 25 basis point cut in September, which is a really big deal for stocks and risk assets and things like Bitcoin and gold, because it's an expansion of liquidity. Basically, you make the cost of capital lower, which is good for those kinds of assets and securities. And so, but I do believe he leaves the door open.
Bitcoin is presently trading at about $111,000, indicating a cautious market as it moves through the volatile September season. By the end of the month, analysts estimate the price may increase to over $125,000, while declines to about $100,000 are also anticipated. This conflicting prediction coincides with weaker market sentiment and past patterns that show Bitcoin frequently experiences declines in September. This concern is reflected in the larger cryptocurrency market, as seen by notable withdrawals from spot Bitcoin ETFs and a rise in interest in Ethereum ETFs. Investors are keeping a close eye on impending U.S. economic data, particularly job reports, as these could impact Federal Reserve decisions about interest rates and liquidity, which could have an impact on the price of Bitcoin and market risk appetite. Some big Bitcoin investors, known as whale investors, have been liquidating some of their holdings. These investors may be selling billions of assets they have amassed over the years to diversify or finance their lifestyles. Nonetheless, it is thought that many people still anticipate that the value of Bitcoin will rise significantly over the coming years, possibly by 10 times. Therefore, these sales are a tactic to access gains while retaining long-term optimism rather than a reflection of a decline in confidence. James Lavish talked about this pattern in a recent interview, stating that whale sales may be a component of larger market movements. He proposed that some investors try to reinvest in new opportunities associated with Bitcoin's expanding ecosystem, while others use their earnings to achieve their objectives. Here are some further interview snippets to help you better understand James Lavish's astute market analysis. For more stuff, kindly like this video, follow the channel, and enable post alerts. We appreciate your patience. Watch the remainder of the video.
Ushering him into that building and embarrassing him with the way he's got that hard hat on. He just looks like a little boy over there next to him, and pulling out the paper and as if he's like the principal admonishing his student. I think regardless of all that noise, I think that Powell wants to solidify his legacy that he got the job done. He did not let inflation rage out of control, although it did rage, and it got nearly got out of control. And it was because of what the Fed did. Let's make that clear. They caused this problem. But he did put the fire out, and he wants to cement his legacy there. Now, the question is, what words does he use to do that? And I believe that he's going to come out and he's going to say that we're getting comfortable with the trajectory of inflation. We're more concerned about jobs, which means that it opens a door for a 25 basis point cut in September, which is a really big deal for stocks and risk assets and things like Bitcoin and gold, because it's an expansion of liquidity. Basically, you make the cost of capital lower, which is good for those kinds of assets and securities. And so, but I do believe he leaves the door open. And what you're seeing right now is some uncertainty around how he's going to come out this week. What kind of numbers are still coming? Because we still have another CPI, another PPI, another PCE. We got more unemployment numbers between now and the next September meeting, and he could change his mind like that. And so there's probably some uncertainty going on, and Bitcoin's definitely sniffing that out and getting a little nervous here. Again, on very light volume. That's a long answer to your question, but that's where I believe we're at right now in the general market. I think it's terribly unreliable, as we've seen, and it's lagging. And so the problem here is that you've got data that's lagging, and then you've got a Fed that lags the data. So they miss the mark every time. They overshoot. But you've also heard Powell say that he'd rather overshoot on tightening than on loosening, because it's kind of like, if he's loosening too much, that inflation could that fire could rage out of control. It's very difficult to get that back in line, as we've seen. I mean, it's just the law of physics. It's very much like a wildfire. But if they print too much money, which they did, and we saw happen, and then they scrambled and in a near panic to get that under control by not only implementing QT, quantitative tightening, where they're selling those bonds that they bought off their books, the Fed, but also by raising interest rates at a breakneck speed, which they did. But inflation got above 9% that we admitted to. I mean, you can't tell me that my insurance costs were up only 20%. I mean, they've doubled and I'm, knock on wood, great driver with basically a perfect record here. And my insurance just keeps going up and up and up and up and up. There are a lot of reasons for that. The simple reason is inflation. Another reason is because you have a lot of uninsured drivers out there that, the insurance companies have to raise the prices in order to cover the costs of everybody else who's not paying for it, just like healthcare, just like Obamacare created the same situation. The people who are paying for health insurance are paying more to subsidize the one. I think personally, from what I'm seeing, I think that the economy is rolling over. That the jobs numbers were terribly inflated by fiscal spending by the Biden administration, hiring millions of people, and so I think that has kind of covered up this what could have been a recession last year, and the rollover of the economy here. And so the people losing their jobs, that it happens so rapidly, Brandon, that's why you have something called the Somme rule. And the Somme rule says that if you get over if the unemployment rate rises more than 0.5% from its lows, and there's more math to it, but that's just oversimplifying it. But for all intents and purposes, that means that the Somme rule is tripped. That means you're already in a recession, and it jumps from there. It doesn't just go to 4.3%. It goes 5, 6, 7, 8%. Like it happens so quickly, and you see it in all the recessions. You can just go chart out unemployment against recessions. You could see how quickly it happens. And so I do believe we're rolling over. I do believe that interest rates are too tight, and we do need to lower them soon. What we're seeing in pricing is it's difficult to figure out for a number of reasons. You've had a lot of chatter about it and a lot of noise from mainstream media, specifically around tariffs and how tariffs are going to be inflationary. And I think that scared people into buying the things that they needed to buy, wanted to buy in the first quarter, in the first half of this year. Big things, iPhones.
The price movements of Bitcoin at the moment can appear significant, although they frequently occur with little trading volume. There isn't enough activity to accommodate large exchanges efficiently, so when someone wants to buy a lot, they have to move the price. There is uncertainty in the market since it appears like more buyers are holding back than sellers are pushing out. Jerome Powell, the chair of the Federal Reserve, is attempting to demonstrate that he managed inflation, which rose significantly. Powell is expected to emphasize jobs and declare that inflation is under control, which might be interpreted as a hint of an impending modest interest rate cut, because lower interest rates make borrowing more affordable and promote investment. This would be advantageous for equities and Bitcoin. Future economic forecasts, however, can cause changes and make the market wary. Recent large-scale sales by several prominent Bitcoin holders with little impact on prices raise the possibility that they are transferring money to Bitcoin treasury firms. Public companies that own Bitcoin are also raising capital to increase their holdings. Due to this change, the price of Bitcoin has remained stable over the previous few months, fluctuating between $110,000 and $120,000. Even some whales are joining these businesses to assist in their management. This indicates a shift as investors search for more methods to profit from Bitcoin outside of simply owning the currency. Let's revisit the interview and view other snippets to learn more from James Lavish.
There was talk about how iPhones could double or triple in price if Trump insisted on bringing all that manufacturing back to the United States and levying massive tariffs on Apple. We saw that was avoided. That Tim Cook went into the White House and conceded that they would be specifically building parts of iPhones here and bringing that back onshore. But people bought iPhones. They went out and bought washers and dryers. They bought cars because they're worried about these tariffs that are being levied on them. And so some of this could be a one-time pass through. Also, producers went out and bought a bunch of goods to make sure that they were able to get the hard materials, the raw materials to make whatever they need to make for the consumers. And so there was again the demand spiked a little bit in the first half of the year. How much of that has impacted pricing? It's hard to say. The second thing is, even if it does impact pricing, even if tariffs do impact pricing negatively and prices rise, I believe that would be a short-term, one-time deal. It's not like you would have ongoing, 3.5% inflation and a spike of inflation ongoing because of tariffs. It would be a one-time 3.5% back down to wherever it was headed after that. It's just a blip according to the tariffs. It'll be difficult to see that because these tariffs are being kind of doled out along the way. So it won't happen in just one quarter or one print, but it'll happen over a series of them, and then that's it. So it still has to do with the economy ultimately, and how well the economy is doing, and how much money supply is out there and chasing after these goods. And so I don't believe that structurally tariffs will long term raise and keep raising inflation. It doesn't make sense to me mathematically. So, but I do believe that we need to start lowering rates, and the reason for that is the Fed keeps saying they're data dependent. They say it over and over and over and over and over. They hide behind this. We're data dependent. We're data dependent. We're data dependent. And then you see certain data and you're like, well, you don't seem to be depending on this data. Number one, you're picking and choosing. Evidence of that is right before the election, the Fed lowered rates by 50 basis points. There in that September before the election, it wasn't warranted to lower them 50 basis points. They might have been, unless you expected them to keep lowering. If they're going to lower by 50 basis points, the expectation is 25 the next one, 25 the next one, 20, then maybe pause. You don't just lower 50%, 50 basis points and pause. That was very odd. It's pretty uncharacteristic for the history of the Fed to do something like that. It was pretty political, obviously. Whether they were getting tremendous pressure from Elizabeth Warren, who had a big voice before the election, it's kind of quieted down quite a bit because people are seeing through her nonsense, and how much it cost, how many votes it cost the Democrats for her to be anti-crypto. But, it was clearly political, and for the Fed to claim they're not political, they can't bend to the pressure of Trump now. So that's clear too. So, however, the situation we're in, I think that the data is giving Powell enough air cover, especially on the employment side, that he could ease but 25 basis points. And it's not that he's giving in to Trump. If he was giving it to Trump, he'd ease 50, because that's what Bissett just demanded. For all intents and purposes, again, he didn't tell him to do that. He said that the models are showing that we're 150 basis points, like 1.5% above neutral, which I think is aggressive. I think we're maybe 1% above neutral. But regardless, whatever models you're using, we are above, and we could ease. But and I think that it's time. And so the markets are starting to tell you that. And the stock market will suffer if Powell comes out this week and he's tremendously hawkish, if he's terribly hawkish, and he does not keep the door open for a rate cut, you're going to see a drawdown in the market. That's my opinion. I believe it's pretty obvious though. But I think Bitcoin and some of the tech stocks are getting nervous here. You had not great earnings this morning. From some of the tech leaders, and so the cues are off, and the S&P is kind of dragging a little bit, and Bitcoin is leading the way. It continues to be the tip of the risk spear. I don't believe it should be, but it is. And We just have to recognize that. People have to get their heads around that, especially the maxis, who I agree with them that it shouldn't be, but it is right now because it's considered that way. And it's going to continue to trade that way until further notice. And so that's kind of the reality, or are getting subsidized to get coverage. It's just the reality of the structured program. That's the way it is. So, but, back to your point, it's lagging. It's always lagging. It's imperfect. It's always imperfect. These surveys are almost comical. You've got half the people don't even answer the surveys, and then the ones that do are giving data that may or may not be accurate, and it's lagging terribly. And then they go back and revise it. The one thing that doesn't get revised is the unemployment number. So even though you've got 500,000 jobs that have been taken off the table from beginning of the year, the unemployment number doesn't get revised, just the number of jobs that they counted. And one of the big things that I always wonder about is there's a huge assumption in these numbers that's called the birth and death model. And that's the birth and death of companies. And so they assume that there are companies being created and companies that are being destroyed, shut down along the way. And those assumptions have massive numbers of jobs around them. And if that assumption's wrong, then it can sway, by 50, 100,000 jobs either way, easily. And so that's a big problem, and they've got to figure that out. And then again, the Fed is lagging. And to go back to the analogy of the wildfire, if they get it wrong on one side where they are too easy, they make the policy is too easy, it's expansionary, they print money, they give it out, they have low interest rates, they have ZIRP, zero interest rate policy. It makes everything, more expensive, and there's more dollars out there. There's more borrowing. There's more dollars created through borrowing, through the way the banking system works. And it's created from the Fed and put out to the consumers. Hard to get that inflation rage under control, that fire. On the flip side, Powell would rather be overly tight. Why? Because it's easier to jumpstart the economy by implementing QE, by printing money and buying bonds and putting money out there that wasn't out there before, and controlling that flow and lowering interest rates to ease, to get the economy going. It's easier for him to do that than the flip side. And so he'd rather get in the situation where the Fed has to control the just the steepness and the depth of that drawdown and recession by printing money and easing interest rates. So, and he's doing it in a lagging, in a way that's lagging the economy. And so that's what gives investors pause, and that's what worries them, is that he's going to stay too tight for too long. And here we go again. The Fed's going to create another recession by keeping a lid on the money supply and on liquidity.
The multiple on the net asset value of Bitcoin kept on a company's balance sheet, or M&AV, varies but typically settles between roughly 1 and 2.5 times, according to James Lavish. He revealed that after talking with management about the company's strategy, they started purchasing MicroStrategy shares when the M&AV was at 1.2. Compared to other companies, MicroStrategy is unique since it has superior access to financing markets and more than 600,000 Bitcoin. He explained how businesses raise money to purchase Bitcoin by using financial instruments, like preferred shares and convertible notes. Because traders short shares when they purchase convertible notes, they can prevent stock prices from increasing too quickly. Conversely, preferred shares do not reduce the value of the stock and instead pay dividends based on the future price of Bitcoin, as Bitcoin itself is more difficult for Japanese investors to access. James Lavish also identified Metaplanet as Japan's primary Bitcoin stand-in, addressing a market vacuum. Similar financial strategies are employed by Metaplanet, which creates an arbitrage advantage by borrowing yen to purchase Bitcoin. Similar circumstances exist in other nations, including as Brazil, Canada, and the UK, where businesses provide distinct regional advantages in terms of capital access and regulation. He emphasized that any company's M&AV is determined by a number of characteristics, including its leadership, competitive moat, and capacity to raise funds for Bitcoin acquisitions. Some, like 21.co, intend to diversify into Bitcoin finance products like loans, while MicroStrategy wants to become the largest Bitcoin treasury firm. A shift beyond merely financial engineering may occur when businesses with robust cash flow begin purchasing Bitcoin directly. Do you believe that Bitcoin whales selling off a portion of their holdings is a sign of a market shift or just prudent long-term profit-taking? Kindly share your opinions in the comments section below. Press the like button with your thumbs to share this video. I appreciate you watching. Remember to subscribe.